I'm giggling this morning. Welcome to Trading with Larry. I'm actually laughing as we come on the air. The CPI number comes out exactly, exactly in line. 1/10 better year over year. Exactly in line. My question to my cohort here is whether whether this is real. That's all I'm trying to wonder. How could this be real? How could these numbers even be trusted or real? So,
Maybe it's real.
aha,
Maybe
okay, maybe it is, but why is it so good? Why are we up 100 handles? Because the number literally came in line. It actually
it's
missed.
interesting. I saw the JPMorgan estimates for today. Let me see if I can pull it up. But they had some estimates. Basically, like an inline reading should get us a pretty decent up day. So
Why?
here we
Why?
are.
Why? I'm just
Not
wondering
sure.
why. Why? Why would an inline reading get us something good? I'm just,
Inflation.
inflation is
Inflation
under,
came. Market.
wait, inflation is under control. CPI X food and energy, okay, X food and energy is 3.1, okay, and that's higher than expected. And the prior was 2.9. The year over year CPI is 2.7 in line. I'm lost, dude. I'm lost. I mean, listen, the market is bull no matter what. So every number is bull. Um, I loaded the camper before the number because I knew the number would be good. So here we sit. It's just the same thing every time. I mean, what is so good about this number? I just don't see it. I don't. I'm looking. I'm trying to look on my Bloomberg, and it's just such an inline number that I don't understand. You're not looking for a better number. It's just okay, so it's fine. I mean, you and I both know if this number was real, it would show a little bit more inflation because obviously the tariffs are hitting. And then you got to worry about next month and the month after because Taco Trump, who tacoed yesterday on Intel, I don't know if you saw that. He wanted the Intel CEO fired. That was last week. And this week he loves the guy. Maybe he went and gave him gifts or something, but he said it's okay for him to stay now. And then the funny thing is, Trump, I don't even understand how everyone's okay with this. The government is taxing Nvidia 15% in AMD. And then today they're talking about Nvidia being able to sell like a Black Hawk chip or one of their other, I forgot what's that, the better chip called? I forgot. But they're now thinking that China wants that. Meanwhile, China said again today they're not buying the H20 chip. I don't know if you saw that, but they literally came out and said they're not buying it. So, the bottom line is Trump is going to let them sell the better chip, but he wants 20%. I mean, what is this? Like the government's involved in the dealings of technology companies, of their profits. They're just taking parts of their profits. And you know what? Jensen Wang is like, sure, take whatever you want. We don't care. Just keep letting us do what we do. Um, so anyway, I mean, this number is I'm gonna just say bonds didn't even rally off it. I don't even know why we rallied off it. I'm being honest.
Bonds are down a little
What?
bit.
A little, tiny, tiny, tiny. They rallied more and then they just came in. I'm just saying, like, what is so? Listen, you could do what you want. Me looking at this, it makes sense because all they want to do is buy. They'll look for any reason to buy. This will be the 20th opening up in the last 21 trading days. That's over a full month of trading without a down opening other than one day. It's never been seen in the history of the stock market. So I don't know. To me, the number was fully in line. The reaction is, listen, you got to trade the reaction. The reaction's a reaction, but it's an overreaction. And now everything from yesterday that was down is back up. And we're back on. Palantir back on. Nvidia back on. This back on. So everything's back on. And Nvidia rallied $1.50 off of that CPI. I mean, I don't know.
How
Palantir
do you
made
how do you
$2.
trade? How do you trade these days? These CPI days, and do you have an approach that you kind of go to
No,
when
I
these
got no.
reports come out?
I'm caught short. So I'm gonna be paying the piper. Touchdown Tommy behind me. We haven't done anything. We probably need to sell a put spread for tomorrow that's basically 20 lower, but he hasn't, he's just sitting there mummified behind me. There he is, the mummy. And here we sit. You know,
Futures are up. It's interesting. Futures are already up 50 basis points, and that JPMorgan thing I
Dude,
was referencing earlier, they're like anything that comes between quarter and point 0.3 month over month. When we were at point 0.3, they're estimating a gain of 75 to 120 basis points on the stock market today.
okay.
You're basically almost there. How do you
Yeah,
handle days like this? Do you look for reversion? Do you look for momentum? What's your approach?
no approach today. Just going to wait to see. Not doing anything. Wait to see how the market reacts. It's just a rig, dude. You're trading a rig, so you got to be careful and trade the rig. Bonds are lower on the day, by the way. So explain that to me. Hmm.
Yeah, buy the rumor, sell the fact, right?
Well, why would it be good for equities and not the bond market? I'm just trying.
Yeah, we've seen these crazy divergences a lot lately, where the market and stocks and bonds are just operating on two different parallels.
No, stocks are in a bubble. Just buy everything no matter what. Like, it's just what it is. There's nothing anyone could do or say about it. You just got to buy. So we're in ridiculous buy mode. I thought like yesterday was I said it on the air and someone reminded me we used to call it on the floor the reverse jammy, which was market opens up, reverses, and then they jam and close on the low, which is sort of what they did yesterday. And then today, Nasdaq is what you call gone. Nasdaq isn't even in the ballpark. It's ripping, and there's nothing anybody could do about it. So that's unfortunately what we're seeing here.
I'm a little confused though. You and I were talking yesterday, and I was completely wrong on this number. I thought we were going to come in pretty hot, right? But you actually thought otherwise. You thought we would come in line, right?
Wait, I thought we'd come in act, but yeah, I did. I thought we'd come in line and they'd sell the market because they had, weak action yesterday. We come in line, like I'm seriously staring at my Bloomberg and I'm not getting why would we be up 100 NASDAQ points on a completely inline number? And you knew the number was going to be in line. And you know how you knew? Because people didn't want to get fired today. So right now, no one's getting fired because the number's in line. If the number was not in line, people would be getting fired today, literally fired. But to me, looking like at
Let's hope that's not why the number came in line. I'm not. I don't believe that, but you can't actually believe that, do you?
100%, 100%.
Really? Okay.
Okay, let me ask you a question. Let's do a deep dive. Who's taking these surveys? This is just a survey. Okay, this is not a precise exact number. It's like unemployment. Same thing.
No,
It's a survey. Okay. The
we
bottom
need better.
line.
The Fed needs better data. The interesting thing about the Fed, they operate on this BS data, which is
You
prone to
just said
error.
the data is not BS. Now you're saying it's BS data. Which one
No,
is
I
it?
don't think there's a. I don't think anybody puts out the numbers for political. I just
What is political? This is not political. This
to
is
save their job.
listen.
I don't
You don't
think so.
think that Biden was putting out freaking
I'm going to
unbelievable
give the
numbers?
government employees
Dude,
the
you
benefit
know
of the
what?
doubt.
We're gonna end the podcast. If you don't think that the government was putting out real jobs numbers, why would they have revisions of 1 million jobs? How could you not calculate 1 million jobs?
Well,
They
because
all
they're
of a
just not good
sudden
at what
took
they do.
away 1 million jobs. They took away 1
Because
million jobs.
they're not good at what they do. I don't think there's a nefarious. I'm going to take Ray Dalio's stance on this. He's like, yeah, the head of the BLS should have been fired on the grounds that they don't know what they're doing, but I don't know if it's a nefarious kind of thing.
I
I
don't
just
know.
don't think they know what they're doing. It's two
Okay.
different things.
Right, wait a second. They don't know what they're doing, but the numbers come exactly in line. You don't think they know the number. They just came up with the exact number that was in line.
Well, the number comes in line
Come on.
because
Listen,
all
dude.
the economists
I
know the
love
rules.
you. This is beautiful. You're right. They nefariously didn't realize they were looking for 2.7, and it came in at exactly 2. Didn't come at 2.8, didn't come at 2.5, didn't come at 3.2. It came in at 2.7. The exact numbers, month over month, 2.2, exactly point 0.2.
Whatever.
Year over
It's
year.
what,
I know
what,
they could
what
flip year over
I'm
year.
struggling to understand. What I'm struggling to understand is
Mhm.
how you knew the number was going to come in at point 0.3 and still decided to be short.
Because I thought the
That
market would go down. Because I thought the market would go down. I don't know what's bullish. When a number comes in line and they're looking for lower inflation in general to cut rates, that to me looks bad. And all you're
well, you
looking
know,
at, to be honest with you,
this market
all
is
you're
looking
looking
for an
at,
excuse.
dude, I can't even speak today. All
All right,
you're looking at is price action to decide. The price action that we're opening up is making you decide that this is a good number. Yes, if we were down, you'd be like, oh, this isn't a good number. What I'm looking at, which reverse the other way again, is the bond market. I'd like the true in this market right now is the bond market. Okay.
all
Okay.
right.
Look at
I'm
this.
not short bonds or long bonds.
Currency,
Larry, you know my
currency.
position.
All right, go ahead, dude. I'm gonna sit back.
No,
You
no.
talk. You're
I
not even
wanted to
letting me finish the sentence. It's all good.
go ahead.
I'm
Go ahead.
good thing I'm tired today. Okay, because this is ridiculous. I mean, every time I talk, dude. Would you take something today? You want something? I mean,
I
you're not
took my
even.
Ritalin.
I mean, you must be long or something. You're so happy.
I am long.
An
I am.
inline number. Take, dude. See, that's the thing. You'll take a position into the CPI. Okay,
No, I won't.
straight outright. Well, you just said you're long, so I don't know. I don't know what that
Yeah,
means.
I'm hedged. You don't want to know my positions. You're going to kill me on air.
I know you're long
It's like
S and P,
a
short
combination.
Nasdaq, long Nasdaq, short
Exactly.
Russell, whatever. But here's what I would say: the market, the day hasn't been told yet. Okay, because if they sell off today, you're going to see a much bigger sell off. I don't know what's getting them so giddy about this number. To be honest, it's an inline number. Okay, I don't care that JPMorgan is telling you if the number comes in line, we should be up 1%. Why should we be up 1%? I mean, wouldn't you think you'd see a much better reaction in the bond market? That's where the Fed is living. They're not living, they're actually reverse living in the equity market. If the equity market gets even more frothy, there's less chance that they're going to cut. They may not cut because they may say the market is too frothy and there's irrational exuberance, which there is in the market. Because, like you just said, I just before we get into anything else, I want to look at the number. I want you to look at the number and you tell me if this number is exactly in line. I'm just asking you, is it in line?
I mean, the headline numbers in line. Yeah.
Yeah, all these numbers are in line. So my question to you, if the number is in line and that's what everyone was looking for, why would the market rally? I'm not understanding. That's what they were looking for. It came in exactly what they're looking for. Why would that rally the market 100 Nasdaq points?
I'm actually selling a little Nasdaq here,
Oh
right
boy.
here.
Uh-oh. Look out, everyone in
Hello.
there. You might see like fluttering in the market. You
You
might
know,
stop
great. I love.
trading. Why are you selling? You just told me how bullish it is because it
Yeah,
came in
well, the
line.
market did because I expect stupidity in the market, and I got the stupidity. And now let's see if we can revert. I love
Dude,
economic
you are
report
such
days.
I cannot wait for them to smoke this thing okay, where you just keep buying dips and whatever you do over there in that cave in Brooklyn. Okay, I cannot wait for that day where they smoke you out. I
I know
mean,
you can't.
literally,
can't.
this opening is a lack of respect to the market. Lack of respect. This is an inline number. You can't even get bonds going. They can't even rally. You told me last week that the market rallied because the Fed is going to cut rates. Okay, but the bond market can't get out of its own way. Okay, so how in the world is this number? How are they looking at this number this way? I'm just listen, Mark. Listen. The one thing is, trader, you got to respect the price. So we respect the price, okay? But clues around the market today don't make sense to me, okay? You got very, inline inflation, which is not at the Fed's target, by the way. Is the inflation number at the Fed's target? No, it's not even close. It's a full percent away, basically, from the Fed's target. So I know this is bull monster because they got to buy every tick every day, every minute of every day. Okay. But the truth is, okay, the dollar acts really badly. Again, it finally looked a little better yesterday. That reversed. The bond on the longer end of the curve is like negative, okay, which basically means that this bond market to me is telling me looking at it as a professional trader and someone that's done this for a long time, this bond market is looking to me like there's only one cut coming this year potentially because the long end would act a lot better. The long end is telling me that they're going to be potentially one and done. I don't even know why they're going to be one. Why are they going to be one? Like, why do they need to cut rates? I don't understand. There's nothing out there that's showing me that they have to cut rates. And then the reaction of the market is actually scary. It's like buy first, ask questions later. Don't you don't know what's going on. I mean, it's a little bit crazy. What's going on? Um, a second ago you were all bullish out of your mind. The market must have sold off a little because I don't hear any chirping. Um, so we must have come in. Let's take a
I'm,
look.
I'm trying to. I'm trying to get short here a little bit.
You're
You know.
confusing me. You're
Yeah.
confusing.
Look, uh, my positions switch quick. I don't like to kind of like have too much of a. I'm just trade. I don't like
You're the most
have.
opinionated bull I've ever come around. I mean, what do you mean? I mean, you're never short. I mean,
Yeah,
come
there's an
on.
opinion, but then there's you got to decide whether you're trading on a macro opinion or you're trading specific kinds of repeatable setups over and over again.
I guess. Let's get to more important things. Let's get to the market.
Well, let me ask you about bonds for a second. So I'm short. I'm short bonds, right? So bonds are kind of down, not really joining the party um, on this report. Would you be adding to a bond short here?
Would I?
Yeah,
Yeah, I added to my bond long today. I
I
added
don't
to
get
my
it.
bond.
Do
I added
you
to
think
my bond long when the bond was down, and I'll actually, you know what? I was going to say I'd buy a little more here. I'm going to wait a little bit. I mean, I don't understand, honestly. I've been trading for a long time. I don't know, what have I traded? If I traded 40 years, I've traded 12, I've probably traded 1,000 of these numbers, okay? And none of them have been like this. This this is the most inline number I've ever seen. The reaction is insane, okay? It's an insatiable appetite to buy stocks and risk assets that they think there's no risk on, okay? And I feel like we're running out of time because like wouldn't you think, like, here's my thought, like you get a CPI that's actually better than expected, which this isn't. You see bonds up two sticks, or as we say, or two full points. We call them sticks, so two sticks, okay? And you have a market that's ripping because interest rates are going down, or there's a sea change in Fed thought process. you're not seeing any of that today. You're seeing an inline number, okay, that the market is overreacting to in an insane way with an insatiable risk appetite of buying the same stocks, buy Palantir, buy Nvidia. I mean, isn't there going to be some level where it becomes insane? Like if you pull up a chart in Palantir, give me a chart in Palantir from the beginning of the year. Okay. Can you pull it? I mean,
Yep.
you won't even believe it. Looks like if you could climb this thing, you would be in one of the greatest peaks of all time. It would be bigger than Everest. Okay. I mean, it is unbelievable. And no one wants to sell it. And the people that own it don't even know what it does. I mean, for real. That's not what I want to see. Dude, you got to get like dude, the 6-month chart looks parabolic. I don't know what you're showing. That's not
This is a
no,
this is a 12-month chart.
dude. That
12-month chart.
okay. Well,
This doesn't look
I'm
parabolic.
looking at
I
it
mean,
right
it went
here,
from
and I'm gonna
it
put
went
it
from
up.
35 to
I'm
182.
gonna pull it up on the screen. That's not how this looks. Okay.
No,
No, this is how this looks.
go ahead.
That's how it looks. Parabolic. Everest, right there. Mount Everest.
Okay.
Okay. I don't know what you're showing there, but it's not.
Yeah, 12 months.
It's literally. How could the chart look like that if the stock is up 145% in the last 7 months? I'm just trying to understand how could the chart look like that? That looks like a flat chart. It doesn't even look up. It actually looks like the stock is lower. I don't know what that is. Maybe you pulled up a different stock. I have no
No,
idea. Anyway, but what my point is these stocks are up 150, 200%. And you know what the difference between this time and any other time is? We see this in what they call the meme stocks or whatever. I mean, when would you ever think Microsoft could move, which is like the second biggest company in the world, move 150% in a year? Like, that's what's so different about this. They're coming into like, I was looking at comments over the weekend. Listen to this one. 80% of the gain in the S&P is in 9 stocks. 9 stocks. 80 or 85% of the gain. So all they're doing is buying the same stocks every day. Today could be interesting. I think, obviously they're going to buy as much as they can, and we'll see if sellers come into the arena. Because, like I said, they're running out of time before everyone gets back from the summer. And, this is what we're up April, May, June, July, August. This is the 5th straight up month off the low. We're up about 47% in NASDAQ off the low. That's not a lot, by the way. That's a little, right? 47%. That ranks in literally in 2.5 months. That ranks in the top 5 best years in the history of the NASDAQ. So that in itself, all these things are scary, but the market's climbing the wall of worry. We're still sitting tight where we are. We're trading. We're picking our spots. It's just very hard to determine like what to really look at here to really make money. And the market, listen, it's like you said yesterday, you know what the straddle was this morning? It was before the number was like $50. So they knew we were getting a 40-point move. They got that 40-point move, and basically here we sit. So we'll have to, we're going to have to assess the landscape. We're, going to be nimble. If the market looks like it's going to roll over, which at this point it doesn't, we'll react to that. And, it's more of the same. Gold is somehow up. I don't know why is gold.
That straddle is now at the money 28.
Well, we already had the move, so
it's still 28. I mean, right? You
what do
said
you
that it was
What do you want it
40.
to be? What do you think it should be? Bro,
Um,
we're up 40 handles right now. What if
I
we,
thought it would. I thought it would come down to like 20, 22.
why? Why? What if we reverse and go down on the day?
Because that's where the straddle has been trading on non-event days.
Right, but listen, when you're looking at the straddle, it's important to understand we've moved 40 points. So the reason why the straddle is where it is not because of the upside. They're not concerned with 25 or 23 or 27 on the upside because in your world that would be your two sigma move that you always talk about every other hour. Okay, that would be the two sigma move. Okay, and they don't, that comes up very rarely. So really it's betting, or not betting, I don't like to use that word, taking risk on whether the market will come in 28 handles, which it could easily come in 28 handles. How about the day last week? We were up 50 handles, okay, and then we went negative 40 handles. So these straddles have not been pricing very well. I would say that. You know,
After a period of pricing perfectly,
yeah.
right? You had that period where you just sell the iron condor at the open.
You know what? We went through a period of a month and a half. We had like 18 winning trades in a row. And then last week was choppy, finished a little bit lower. We haven't even touched anything. We didn't touch anything Monday. Today I'm more nervous on the downside than the upside. I don't understand this opening. Again, it is here and you got to trade it, but it's truly not understandable, especially why is it so bullish when the numbers come in line? Why is that? You're saying JP Morgan is like saying we're going to be up because the numbers are in line. Well, why didn't JP Morgan change the numbers to
Well,
make them not in
what
line?
it feels like with these JP Morgan estimates, it's like a suggested donation. They're like, you walk in, or like a suggested tip amount. And they're like, well, if the number comes in line, you guys should buy it up to here, and everything is a buy. There's only like one scenario where the market falls. They want the market to go
One,
up.
really? I'd like to see it. Can you actually send it to me? One, that the market goes down? Come on. We're in bubble land, baby. No matter what, inline numbers get us up 100 NASDAQ points now. All you have to do is, dude, earnings, you come in line, your stock's up 50. you know, um, CPI
What if
comes
you
in
mention
line,
AI? What if you mention AI?
can't rally the bond market, but the equity market can explode. I mean, come on. This is ridiculous. It's actually insulting to your intelligence. Okay. The market is up and away every single month. The last 5 months, it's literally had one down week in the last 8 weeks. That's literally the whole summer. Okay. A number comes in line and they're stoked to the moon that they think that's amazing. But the one thing that's the critical clue doesn't rally, okay, which is the bond market. That is way bigger than any market around, okay, other than currencies. And that market can't move. So I know they're all bulled up and they think the rip is coming, whatever. Something doesn't make sense. That's all I'll say. Something does not make sense. And to be completely
I
frank,
hate to say it, but I agree with you.
dude, you didn't agree with me when the pot. Dude, your price. All you are is. I'm calling you Johnny Price. I went to elementary school with Johnny Price, and I'm calling you Johnny Price. If the price is down, you're agreeing with me now.
Price
Before
is up.
you
What
were
are you
like,
talking?
they're
Price is up.
no, the
What are
price.
you talking?
We're $40 lower in Nasdaq, 50 than we were before. So I don't know price, dude. This
I
market
told you all the year
this
we're shorting
market
that.
has so much work to do that it's not even funny. But that's that'll be for another day. I just I'm not
VIX really
understanding.
gets
I'm
it.
literally I swear, I feel like I'm in like a movie. I keep looking over at my Bloomberg to see the price, something look different on the numbers that came out, and they're dude, they're dude, I'm going to tell you something crazy. You ready? There's something called the CPI Index NSA. I don't know if you're looking at that. Okay. It's 323 spot 286. You know what the number came in at? 323 spot 448. It's off by 100th of a basis. I'm telling you, this is rigged, dude. And then there's another number, core index SI. That's in line. It's out 4 decimal places. Come on. You don't think this is a rig? This number is in line in everything. Out. I'm telling you, it's out 4 decimal places.
We've seen so many reports. You've traded 1,000 of these.
Right. So that's what I'm saying. Why is the market so hyped on an actual report that is probably not real and is completely in line? I mean, how are these numbers? Core CPI Core Index SI. We're going to do a little research and come back tomorrow. This thing is in line to 328.6565. It's got, 100,000th of a decimal place. It's in line. How is that? How can that be? That doesn't like make you a little leery that this number isn't real? I mean, I'm telling you, wherever I don't know. I don't know where they calculate this survey number, but wherever that was, those people were in a frenzy. They're like, holy cow, we got 3.0. If we put this out, we're losing our job. We better change this number right now and make this number in line. We don't want it too good. We don't want it too bad, in line. And then somehow the stock market that rallies every single day of every single week rips on this number that's in line. How? I'm just saying how. What? Listen, show me the bond up 2 points, and then I'll agree with you. I'll be like, you know what? Fed's cutting rates. Things are looking a little easier, blah, blah, blah. Fed's not going to do anything off this. This number is solely in line, and it's a fake number. I'm telling you, I know you hate when I do that, but when I'm looking at this number, CPI Index NSA, completely in line. Core CPI SA, completely in line. CPI X Food and Energy, basically worse than expected. I don't know. That number is worse than expected. That's over 3.0. Why is that bullish? What is bullish about this number? Tell me. Give me the bullish scenario.
I'll tell you one bullish scenario. By the way, I thought
wait, JPMorgan says you should buy. What? JPMorgan, like you said before.
I'll just let you talk. Go ahead.
I'm just telling you, they have no scenario that you should sell. You actually said that on the air. There's one scenario. I don't know what it is. I'd love to know. But every scenario is to buy. Okay. And the funny
You want to hear what's bullish or no?
No, but listen, X Food and Energy.
You don't want to hear what's bullish.
No, I don't want to hear it. It's not bullish. I'm not listening to you. I'm not.
Okay.
Here's what I'll say. You're Johnny. Your new name for the podcast is Johnny Price, bro. The price was high. You got on. You're like, the market's going to rip. JPMorgan. Then we come in 70 handles and you're like, I'm bearish. I'm short. I don't know. So, yeah.
It's been funny watching you just bash this market every day.
Dude, and I'm making money every day.
You know when I'm going to start shorting? You know when I'm going to start shorting? Like in a real way, like big.
Well, you told me I was bullish last week.
You give up on being bearish.
Dude, you told me I was bullish today. Yeah, the other day. You said I was bullish.
You were. That's why I shorted last Thursday.
All I'm trying to do is help our subscribers stay out of trouble, make money, get ready for the trading day ahead. Okay. Have basically, yes, I think we're in a massive bubble. I think when you see a number like this that's completely in line, actually not in line, it's actually the number X Food and Energy was over 3.0, which is a negative number. Okay. It was not in line. And the market rallies, and you tell me, you come on the air and say, JPMorgan says if the number's in line, we're going to explode.
I came on the air and said I'm shorting NASDAQ. Did you short it with me here at the highs or no?
Eric, please. You said you do convoluted trades, okay? You just shorted NASDAQ now.
That was a specific. That was a different trade.
Okay. So did you cover?
You want to hear what's bullish with
Wait,
the
you're up
report or no?
70 handles. Are you still in it?
I covered a little bit here.
Okay. I'm sure you. What?
You want to hear what's
How
bullish?
could you actually cover half a micro mini? I don't even know. How do you do it? Like you
I
break it up
hedged the
in little
micro
chunks?
mini with like I hedged one micro mini with like 7 different option contracts.
Well, listen, I got 5 minutes to a hard stop. So if you want to talk a little bit more, oh,
I thought this number was going to come in hot, and one of the reasons is I thought tariffs were going to seep into this report or start to, and we actually got the opposite. So I'm just going to read you something from the report. Apparel, which is clothing, up only 10 basis points on the month. I'm going to attribute this to Chris Anstey from Bloomberg, who's saying, yet again, the smallest since May. The picture we're getting here, as far as tariffs are concerned, appears, at least at first examination, to suggest that the impact isn't strengthening and, if anything, is weakening a touch. So the narrative that tariffs are going to cause inflation takes another dent in this inflation report. So
yeah,
you
but can
want
I
to
ask you
know
something? Can
what's
I?
bullish? I kind of think, look, that's something that I admit I was wrong about, and maybe that will still creep in later. But
But
right now, the data is not showing.
how is it going to creep in when nobody knows what the tariffs are? He's rolling back tariffs. No one even knows if they have tariffs. I talk to small business owners all the time. They don't even know what's going on. Okay. Yesterday he pushed the China thing back another 90 days. He's going to push it back until the next president comes in. So do they have tariffs? What are the tariffs? How are they even calculating the money? How are they figuring out at the port of Miami what's actually coming in? What do they got, card counters there that are counting freaking goods coming off the boats? It's very difficult. Um, but
Yeah,
but the number itself is not bullish. Okay, 3.1. Okay, X food and energy is hotter than expected. Okay, so I'm looking at that and I'm saying, you're saying like the number is in line. Yeah, it's in line, but that number is hotter. Okay. Year over year was slightly one tick less, but the number to me on the surface looks hotter. Okay. It looks hotter.
X food and energy month over month came in line, but year over year was 10 basis points
Right.
more.
Right. But it's still above 3.0. So what I'm saying is this is not inflation that the Fed is accepting. So, and the funny thing is, listen, to me, it's the bond market. They could fake rally the NASDAQ 100 points, whatever they do. I mean, 100 is like, you know, nothing. Um, but what I'd like to do in the last 2 minutes is just go over what I'm seeing. The dollar is picking up strength against the yen, which we have that position that's working. The euro is kind of mixed. Bonds are weaker, which is shocking to me, and I don't think the S&P or the equity markets could rally without the bonds. So, again, I'm not looking at the next 40, 50 NASDAQ points. Okay. But I don't, I think this is a complete overreaction to an inline number that to me in my trading life, and like I said, I've traded 1,000 plus of these, doesn't make any sense. And the number actually wasn't in line. We're saying it's in line. It was actually a little bit worse year over year. So again, the market, the
Wait
NASDAQ
today.
the Nasdaq has already sold off 100 points from the high. I believe it was a
Yep.
hundred. It was 100. It's down 100 off the high, dude. So, and
Yes, it is.
it wouldn't shock me if we ended down 200 today. Honestly,
It would
I,
not
I
shock me.
don't I don't see it. I just think they buy no matter what. They buy and don't care. And there's gotta listen, owning stock has risk. I know no one out there believes it, but owning stock has risk. And I feel a lot like this is when I was a hedge fund manager in 2007 going into 2008. Okay. And I was looking like the fool, warning everybody that the market was a bubble and this and that. And, I had investors come in and tell me what this guy was doing and that guy was doing. And you know what? What happened, happened. And we want to remain cautious. Okay. There's trading opportunities here. The market today, listen, if you did that straddle, you're not in great shape. I think $20 or $22 is too low for the straddle. That's just my opinion. Um, but we'll see. I'm going to throw it to you because I got a hard stop. I got to get out of here. I got stuff to do. I hope we got everybody ready. I know during the podcast, you were bullish for a minute, saying you were long, then you were short. I've been short the whole time, and that's it.
Yeah, I'm looking today for a typical pattern in the market that resembles usual overreactions on economic report days. The market seems to follow a certain kind of pattern. There's going to be that point where the market, I think we're setting up for that, where the market kind of looks at this and is like, holy crap, we're about to completely reverse the day's gains. I think, I'm watching the NASDAQ. It's come off quite a bit from its high.
Dude, it's still up. It's still up
It's
100.
still
Okay, I mean
right.
that's if we go up 100 every day or whatever, you're going to the Hall of Fame. We got a 40 basis point up day after last week being up, the week before we were down, and 6 weeks before that we were up. So anyway, I would say this because I got to wrap. Everyone, be careful. Keep an eye on the bond market. That's a good clue for you people. We need a good rally out of that to have sustainable equity prices. So keep that on your radar. And again, the dollar, wishy washy, crude back near the lows. Watch the $60 level. Gold, to me, is a no trade until it gets to the levels. And I wish everybody a great trading day today. Peace. Enjoy.